Hello everyone, welcome to the rebalance model. Do you ever wonder why price will suddenly pull back into the middle of a move, retrace, right before taking off again? Well, that's not random. That's what we call a rebalance, and it occurs every single day in the market. Now, this model takes advantage of these rebalances and positions us to join the move throughout that next leg, should there be higher objectives for price to draw towards. This rebalance model is called the rebalance model for a reason. There's no special names for it. It literally is focused on price rebalancing two imbalances with clear draws either above or below, looking for those extra confirmations, and how you can enter and take full advantage of this move, of this model that occurs every single day in the markets. I will go into the details of this model with visual examples for the visual learners. So without further ado, let's get into it. All right, the rebalance model framework. To the right here, as you can see, we have the sketch of this model. And you can see that this is focused on the rebalancing of higher time frame imbalances with clear draws above, clear objectives above. And so price is always either doing one of four things. And so you need to understand that price is either generating liquidity, hunting liquidity, rebalancing to equilibrium, or rebalancing to imbalances. And so this model focuses specifically on entries surrounding those rebalances. You wait for price to make a leg. You wait for price to rebalance. You look to see if there are clear objectives to either the upside or the downside. And you look for those extra confirmations within that model to then take an entry in that direction. And you aim in the direction of that drawn liquidity. Now you can target opposing liquidity towards the draw or target the draw itself if it is attainable. Price will often move aggressively one-sided. And so by nature, it is going to rebalance. It's going to retrace. And I'm going to get into why the markets do this in the next slide. So why rebalance two imbalances? Why does the market do this? So an imbalance occurs when the market is one-sided, leaving a gap behind. Oftentimes when price is either one-sided to the upside, one-sided to the downside, by nature, it will leave imbalances behind. And so price can't just keep going one-sided forever, or else you'll just join in on the move. You'll join in on that move. So by nature, it's going to have to retrace, rebalance, consolidate before making that next move. And so these inefficiencies, these imbalances that form off those moves are often rebalanced too in order to fill and rebalance order flow. And so in these rebalances, you wait for that to occur. You wait for those confirmations. And if there are clear objectives above, you wait for those confirmations to come and you enter taking full advantage of those moves. And yes, this move, this signature in price occurs every single day in the market, day in and day out. It is there amongst various sessions. And so you wait for that leg up or down, you wait for that rebalance, and you look for price to establish that next move, and you take full advantage of it. Now the requirements. Number one, you wait for that higher time frame rebalance. You can use the 15-minute, for example. If there's a 15-minute fair value gap to rebalance to, if there's a clear drawn liquidity, you wait for that rebalance. Then you go to the lower time frame. You wait for that internal sweep, that internal manipulation, a sweep of liquidity. And price often on that retracement will form that internal sweep into that rebalancing of that imbalance. It will manipulate to the downside if the draws are above or vice versa. And you wait for that manipulation, the reversal, and to resume its intended directional delivery. And so you enter in that direction of that drawn liquidity. Additional confirmations are SMTs. And I put lower time frame change in the state of delivery because the higher time frame directional move, you will often be joining in on that. But when price retraces, you can often get those lower time frame changes in the state. And why I put it as an additional confirmation is that majority of the time, when you get that internal sweep, that next leg up will change the state of delivery on the lower time frame. It will form that move that breaks above a high, breaks above that body's high that formed that lower low. And you want to target the opposing liquidity in that direction of the draw on liquidity. And so using this signature in price that occurs every single day, you get to take advantage using this model. How price delivers day in and day out. It is the nature of the markets. It is how price navigates. And now I will get into the visual examples so you can see this model in action. All right, so let's get into a visual example of this model. For this example, we are going into the AM session to showcase the model. And we're beginning on the 4-hour to find the likely draw and session bias. Clearly, without a doubt, price is bullish. The order flow is bullish. We're forming bullish breakers, respecting it, respecting bullish imbalances, disrespecting bearish imbalances. We consolidated here, swept the range low, reversed to the upside, and still from that point on the 4-hour, we are still respecting bullish imbalances with clear highs above. So to me at this point right now, this is the high that catches my eye. Now, unless the 1-hour were to show something different, that is where I think price could likely gravitate towards on the 4-hour. So now let's go to the 1-hour. You can see that price here forms a bullish imbalance right here. The midpoint being respected here. From that point, after, again, huge move up, rebalance to this imbalance, expand, tap into this imbalance again, expand, and the midpoints are being respected on the 1-hour. It's consistent with the 4-hour. Bearish imbalance right here, disrespected. Bearish imbalance right here, disrespected. So these two bearish imbalances are being disrespected. Price is clearly bullish in terms of delivery. Bullish imbalances on the 4-hour and 1-hour are being respected. Bearish imbalances are being disrespected. Clearly, order flow is consistent. The delivery and price is consistent on the 4-hour and 1-hour. And there's clear highs above, like this draw here, where price can likely gravitate towards, heading into that AM session. So at this point, I look and I say, okay, 4-hour, 1-hour agree. Clear high above that price can definitely draw towards. Do we have the confirmations for the entry? Right off the bat, right here, we have a 50-minute bullish imbalance. Price expands upwards and now rebalances to this bullish imbalance. If we get all the confirmations, we would have a trade in the direction of the draw on liquidity that is consistent with this top-down approach. So from this point, 1-hour bullish imbalances are being respected. 4-hour bullish imbalances are being respected. Clearly, price is delivering to the upside. Same thing on the 4-hour, and same thing on the 15-minute time frame. So we get that rebalance in the AM session. I go to the lower time frame to look if we find any entry in the direction of this potential draw on liquidity. And right off the bat from this point, you can see, okay, we're in this AM session. Price forms a low here, rebalances, comes up, and gives us the internal sweep that we're looking for. Why is this internal sweep important? This internal sweep right here is very important because if we have the direction right, if we have the draw correct, and if we have the timing correct, price should not want to come back to this low. Why? Because it just swept liquidity right here. Why would price need to sweep liquidity once more if it just did so here, if we have the timing correct? There is no reason for price to do so. It literally just swept liquidity right here. So you get that internal sweep, you get that reversal. Price makes that move to the upside, forms a fair value gap right here that we can enter upon. We form a breaker right here that you can enter upon, forms another fair value gap, inverse fair value gap right here. So again, even the 1 minute is consistent with how price is delivering. You get that retest of that fair value gap right here. You can enter off that, stop below the low, target that drawn liquidity. You can take partials at the 50-minute buy side liquidity level if you'd like, or you can ride it to your projected draw on liquidity. So we get that entry out of the fair value gap, and all the requirements are met. Drawn liquidity clear, 50-minute rebalance. Structure is bullish. Price is delivering to the upside on all time frames. 1 minute internal sweep off that 50-minute rebalance. Reversal. Price forms the PD array entry in the direction of the draw, and we get the entry tapped into. So off that point, this is our entry here, and we would target the draw. Like I said, you can take partials at that 15-minute buy side liquidity level if you'd like. So we look, we wait, and off that point, here we go. Very nice move to that buy side liquidity. Here you can either take partials, do whatever through your back tests you see as efficient. This is an area where you can take profits and then ride to the drawn liquidity and see if that does get tapped into. So not yet tapped, price is consolidating, but regardless of if price is consolidating, if the draw is correct, price will gravitate towards it, whether it delivers smoothly or through choppy price action. Price is still gravitating to that draw, not yet tapped into, right here. And we don't get it just yet. Hold on. And we get it. So there we go. There is price tapping into that drawn liquidity. Took a bit of time to get it done. Price was not delivering the best, but this is a perfect example to show that even if price doesn't deliver well, if you have the drawn liquidity correct, it will go there. It doesn't always deliver smoothly, but the draw, if it's correct, will occur. So you get that 50-minute buy side liquidity, you can take partials at and ride the rest to the drawn liquidity. You had the draw correct, you had the rebalance, the timing correct, and all the confirmations were met. You take the entry, internal sweep, fair value gap, breaker, inverse gap here as well. You can enter off the breaker if you'd like as well. Those are all valid entries in the direction of the draw. Very clean, very nice move in the direction for a very simple model, panning out day in and day out through various sessions. All right, everyone, here's another example of the rebalance model in effect. I am using the London session for this example. Like I said, this model works amongst various sessions. You can find this model working every single day. Rebalances are occurring every single day on all time frames. So on the 1 hour, let's break it down why we're looking for what we're looking for. Clearly, price comes, take this low, sweep liquidity, nice leg to the upside. You see several breakaway gaps form here, and this bullish 1 hour imbalance does get retested, rebalanced to this 1 hour imbalance, and it's starting to get respected here. You're seeing that. So we're looking and say, okay, do we have any moves to the upside? Are there any potential draws that price can gravitate towards? Price took this high. So we're going to pay attention. If price rebalances to this imbalance, does it respect it? And if it does get respected, are there objectives to the upside? So on the 1 hour, everything is looking towards the upside, as long as that 1 hour bullish imbalance that got rebalanced to is respected. So I'm looking on the 50-minute to see if that is consistent with the 1 hour. I look and say, okay, at this point, we came, retested this bullish imbalance, wicks do the damage, bodies tell the story, body respected it. Clearly, this gap has been respected. We come here, 15-minute bearish imbalance right here. What do you see? It's been disrespected. Another bullish indication. What do we have here? A 50-minute bullish imbalance. Again, it's being respected. So I look and say, okay, we're in this London session. We rebalance to this imbalance. Do we have objectives to the upside? That is consistent with the top-down approach. We have that one there. I look and say, okay, we have this one here as well. So we have objectives to the upside that price can draw towards. So we're going to look and say, okay, do we get a setup within this rebalance that can give us a potential move to the upside? Why? The 1 hour is bullish, the 15 minute is consistent and bullish, and we're going to look on the 1 minute to see if we have the extra confirmations for a move to the upside. So we're looking, okay, here we go. We're going to mark it out. This is buy side right here as well, buy side right here. So we have our objectives clearly put out. Now, on the 50 minute, this rebalance, why is this not valid just yet? Because we didn't get that internal sweep. Price never swept this low on the 1 minute on the lower time frame. So right now there is no trade to take. We're going to wait. Price comes for this internal sweep again. But why is it not valid? This bearish breaker has still been respected. Sorry, this bearish fair value gap has been respected. I would wait to see if this would be disrespected and then look for a potential move. It's been respected. What do? We come for another sweep. So here we go. I'm going to mark out this here. Internal sweep here within that 50-minute rebalance right here. I'm looking to see, okay, do we have a potential reversal move to the upside that is consistent with this higher time frame approach? We look and say, okay, price did deviate outside of this on the 1 minute, but why is this still valid? Because this is a 15-minute gap. So like I said, wicks do the damage. This is a wick on the 15-minute time frame. The 15-minute time frame candle had not closed here. So it's a wick. I'll show you on the 15-minute to show you why it's still valid. Unless the 15-minute closes below, this is valid. Wicks do the damage, bodies tell the story, and I will show you after. What do we get upon this internal sweep? Well, we go and we disrespect this bearish gap. So you're starting to see that confirmation. We have a potential bullish breaker here. So we have a bullish breaker right here that can potentially form. If we get the validation of this, then we can take a shot to the draws above. We have this, we have that. You can take partials here. Clear highs above. Clearly, there's lots of liquidity to the upside on the 1 minute, on the 50-minute, on the 1 hour. So if we get the validation, we would enter upon the breaker, stop below the low, and target in that direction. So right now, nothing just yet. Again, inverse this gap. Finally, we inverse this fair value gap. Breaker has been validated. Wait for the retest. Wait for the confirmation. You enter and target these highs. So let's recap now. Do we get the retest? There we go. So there's our entry. Why did we enter this? So let's go. 1 hour is bullish. Clearly off the sweep of the sell side liquidity, you got a leg to the upside. Several breakaway gaps formed. The 1 hour bullish imbalance that did get retested was getting respected on the 15 minute. 50 minutes bullish as well. 50-minute bullish imbalances are respected with the bodies. 50-minute bearish imbalance is disrespected. So 50-minute is consistent with the 1 minute. You get that 50-minute rebalance to the 50-minute bullish imbalance. You go to the 1 minute time frame. What do we get? Internal sweep, disrespected bearish fair value gap. You get the breaker formation. The state of delivery is showing that it's bullish. So everything is consistent and there are clear draws, clear objectives to the upside. So that lines up for a very nice trade. And it's in a session where price is likely to run. So everything is consistent. So you enter there and you can take partials at this buy side and target the draw above. Now what do we get? There we go. Right off the bat, first move, nice. And there we go. So you get a 51-point move in 7 minutes. A very straightforward move to the upside with clear intentions to take out liquidity. There were objectives to the upside and everything was met from the top-down approach. Everything was bullish. It all lined up stemming from that 50-minute imbalance. That rebalanced that imbalance and then a move to the upside. Now, I use the 50-minute. You can use higher time frame imbalances to look at these rebalances. Find what resonates with you. Now, to show you the example, on the 15-minute here, clearly you saw that on the 1 minute price closed below. But look at the wick. Wicks do the damage. Bodies tell the story. So the wick, it did deviate below, but that doesn't matter. Because as long as the bodies respect it, it's still valid. So we got the bodies respecting it on the 15-minute. The 15-minute candle closed above it. And you got a very beautiful setup targeting those opposing draws. So, like I said, you can use whatever resonates with you. I use the 15-minute for rebalances. 1 hours are valid. Whatever resonates with you. So I want you to go study this, find out what resonates with you here. And take care, everybody.